Hello, hello. Oh, that's interesting. 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 Hello, hello. It's on a never-ending loop. I don't know how to fix that. On a never-ending loop. I don't know how to fix that. On a never-ending loop. Oh, is it because I? Oh no, I have an echo in my microphone. I don't know why. Let's see. Yeah, Bitcoin has SMT. My microphone has an echo right now, so I need to fix that really quick. Uh, let's see. Correlating it with Ethereum. I don't even know what all that other stuff is. Although if you look, this is already SMT on the highs here. I just don't know why there's an echo. I don't know how to remove it. It's interesting. Does that fix it? Oh, I think I fixed it. Did I fix it? Oh, I fixed it. Okay. Great. Amazing. Let's see. All right, can you guys still hear me? Hello, hello. Hello. All right, bet. That's nice. Okay. Yeah, this looks like a really good low risk sell, I'm not gonna lie, for Bitcoin. If you guys are looking in terms of a market maker model, because you do have SMT on the highs here. And you also just completed a 4 hour market maker buy model. All right. It looks like a nice low risk sell. I'm gonna play some music. Let me know if you guys can hear that.
There's a song I like to sing. It says your name, I love the rain. So come here, so come here. Maybe
You hear the song? All right, perfect. All right. I mean, since I'm live, I might as well just do something real quick. I don't know what you guys want. Like, you guys want like a quick Q&A? I do have to go in like 20 minutes ish because I have church, but you know, I'm live. So if you guys have Q&A and some analysis, I guess. For EU and DXY, really the same. I'm still looking at the same thing, to be honest. So, right. So DXY, all I was looking at was this range that we're inside, and it looks like we're starting to like kind of displace out of it, and that's really what I wanted. And then now I'm looking for, this would obviously be the low hanging target, but ultimately I would like this high and then these equal highs all the way up here. I'm not sure, like this is gonna take a while to hit, but I would say this is the ultimate draw because these highs are just too clean, in my opinion. And then on EU, if you're looking low hanging fruit, right? This would be my low hanging fruit. Going for that second pool liquidity, and then you ultimately have this drawn liquidity down here, which I'm not sure if EU will hit that. But you can also refer to your IPTA data ranges, right? So it's like right now, in terms of IPTA data ranges, I'd just be looking at this right here. So we could get upside all the way up, right? So when I'm looking at inversion fair value gaps, I'm looking at, okay, which fair value gap got respected on the sell side of the curve. Well, this one got respected. So what I'm looking for right now is price to trade higher through here, find some kind of consolidation, possibly trade lower through it, find support, ultimately higher. And then once we hit March 21st, we can expect some sort of SMT on the highs, displace lower. You know what I mean? What's up, my Kento brother? Damn, there's actually a lot of you guys here, surprisingly, for a test stream. I didn't expect that. But I also think like a big thing about like the ICT community is that there's not a lot of people there's not a lot of people that stream live. How to differentiate between a valid chalk and invalid chalk. I think chalk is just market structure shift, right? Am I getting that right? Any SMC trader, you're gonna have to clarify that for me. Sorry, but if I remember correctly, change a character is the same as market structure shift. Market maker model is, how do I explain? Market maker model is essentially just identifying the buy side and sell side of a curve of the market. So like whenever you see the market, you see how it's like, so everything ICT teaches ultimately builds into a market maker model. So let me just show you really quick. You have the buy side of the curve here, right? We're going higher. You can see the curve, buy side of the curve. This is really ugly, but it's fine. And then we have the sell side of the curve right here. So this would be a market maker model where buy side, sell side of the curve. Might be clear on the week. Nope, it's not. Can I do gold? You know, I would love to do gold, but I haven't been the greatest with gold. But I'll do it anyways. I've honestly been trying to tape read gold, and it's just like so unpredictable to me. It's like when I look at previous like historical price data, then it looks really good. But then when I do it myself, it looks a little interesting. So it's like my study has just told me every time we take liquidity, we just displace away from it. Right? Take liquidity here, we just displace away from it. And we're gonna take liquidity here now. So I'm assuming we're gonna displace higher. And that's just my experience with gold. Every time it takes liquidity, it just displaces. And I haven't really been able to get a good read on when it's going to move. So far, for me, it's kind of based on economic news, and also when it wants to move, it moves. You know what I mean? So gold is definitely something I'm like having trouble with. Can I show the chart color? Yeah, I got you. So this color code right here, DCD3C9, is my background color. So you guys can save that if you want. It's also in my Discord, I believe, in the announcements channel. And then here for symbol, I like to put 70% opacity. It just makes it look nicer. So then I have this blue right here, the third one down, 70%, and then the black. I don't actually use black. I use like this dark gray, and I use 70% to get that like faded color, if that makes sense. Can I do Solana? Yes, I will. But I'm assuming everything, like I also don't trade crypto too much, but I'm assuming everything really just follows Bitcoin at the end of the day. Yeah, this low-key like kind of looks primed to go higher. I mean, same as Bitcoin. It's just this weekly fair value gap. If we support from this, then I could see us going up here, honestly. Same as Bitcoin. Bitcoin also has that weekly fair value gap. If we look right here, right, we have that weekly fair value gap, and historically, like weekly chart has just been like the bread and butter for Bitcoin for me personally. So if this fair value gap is respected, then I could see this high taking one more time. But I'm waiting for like an obvious SMT divergence. Solana, I don't know. I gotta check the lower time frames for that. It looks like we just completed a market maker buy model, so I could see us going lower. Right? So you want to like pay attention to institutional order flow. So what's being respected right now? Well, I see we have displacement lower, create this fair value gap, right? And we disrespected this fair value gap right here, right? Creating a new fair value gap. Now we're respecting that displacing lower again, right? How long I've been trading? Almost 2 years now. I've been trading since July 2022. But yeah, that's my thoughts on Solana right now. I just, when it comes to like crypto and stuff, I don't really pay attention to these. It's definitely something I'm still like working on, where if I'm analyzing like just different markets in general, because I mainly trade index futures, right? So when it comes to new markets, it's like I don't know the characteristics of these markets. So like take it with a grain of salt, whatever I say. But like right here, for example, like we have SMT with Bitcoin. Like that's a good indication that if we're gonna go higher, this is the point we're gonna go higher from. And if this gets invalidated, then I would just assume we're going lower. If that makes sense. So in my opinion, I think it's always good to have like analysis for both sides. So that way you know when something is invalidated in terms of your idea, and then you just get out your trade. And that's like honestly how I like to keep a high win rate, is whenever something I don't like instantly happens, like I'll just instantly exit. Does that make sense? Mirza, about the change of character color, honestly, change of character question, I would just say focus on displacement, and that's how you like kind of okay, I think the most important things to identify a good, well, in a market maker model term, would be smart money reversal, right? But there's three qualities of a good smart money reversal. One, it has to occur within a higher time frame PD array within that time frame alignment. So like if you're looking for a market structure shift on the 4-hour, then make sure you're in a weekly fair value gap. For example, if you're on the 1-hour chart looking for that market structure shift, you can use the daily. You know what I mean? So just stuff like that. So that's number one, is making sure you're in that higher time frame PD array within that time frame alignment. Then number two would be, I think SMT is extremely important. I believe Zusi said this. He said, SMT is the true smart money reversal. So always be on the lookout for SMT. And honestly, I've been using SMT ever since the start of my trading journey, just because like I learned directly from ICT, right? And he just preaches about that. So SMT is very important. And then number three is either look for a, I think number three is like kind of like the direct answer to your question, but I would say it's not as effective without 1 and 2, because 1 and 2, like 1, 2 and 3, when they're put together, that's when it becomes the best like confirmation of market structure shift, right? So number 3 would be, after taking, let's say, time-based liquidity, you look for a balanced price range, or you look for that market structure shift through a swing point that occurs through a swing point that had rebalanced a previous inefficiency, if that makes sense. I think I have a really good idea, a really good example of this. If I remember correctly, back in July, right? It was a really good example of this. So, in terms of time-based liquidity, what am I talking about? So, well, if we're using IPTA data ranges, we had SMT divergence on these highs, right? SMT with EPS on these highs. And so we can take this high, because this is what create that SMT. So we can do a look back, 20 days, 40 days, and 60 days, okay? So that would be our IPTA data range, time-based liquidity. So if I'm looking here, so 20 trading days, what's the lowest low between this high and June 30th? So June 30th to July 31st, what's the lowest low within that range? Is this low right here, right? So we can take a look at this, and you can see once it takes it, you want to watch these time-based liquidity levels become support or resistance, if that makes sense. And so once we take this time-based liquidity, what do we create? We create a balanced price range right here, right? And we can keep an eye on that. And then what's the next target is the 40-day low, right? So we can now draw our 40-day bar. What's the lowest low within this 40-day? Well, it would be this low right here, right? And so if we project out as well, within 20 days, what we met that 20-day low, right? And then within that 40-day, actually took 41 days, but pretty much spot on. It took that 40-day low. That makes sense. And then you're looking for these time-based liquidity levels to become support and resistance, essentially dynamic support and resistance. And any PD arrays that occur within these, I find that they become strengthened, if that makes sense. At the end of the day, it's just like confluences, right? But I'm saying time-based liquidity is very important to pay attention to, because once we took this 20-day low, what do? Remember the concept of internal to external range, right? So we took this quote-unquote external range, trading back into this internal range, right? And so from here, what are we looking for? We're looking for another either SMT divergence, or we're looking for a market structure shift, right? So where do we get that market structure shift? Well, if we're looking in terms of 2022 model, we get that market structure shift right here. And we know that time's about to be up. If price is going to go bearish for these lows right here, it has to do it by the 40-day essentially, right? So we can anticipate bearishness into these lows, right? Equal lows as well. And then we take that out by 41st day, okay? And then from there, we generate equal lows, and then we trade back higher, right? Where do we trade into? Once again, internal range liquidity. And from here, we can anticipate either a SMT divergence, or we can look for that market structure shift, which we get right here, right? looking for these lows. And if you project this out 60 days, what's the low that we need to sorry, let me just project this, look back 60 bars, right? So that would be this low. So we were unable to meet this expectation, and so by the 60 days we essentially rally. And then if you look here, we actually had an SMT divergence on the lows here on the 4-hour, and so we start rallying, right? And so now we can repeat the same process. Let me check where the SMT divergence is. Yep, it's right here. Perfect. So from here, repeat the same process. Up the data ranges. You project out. So be your 60 day. What's the highest in your 60 day? Be here, 60 days. Okay. And then where's your 20 day? I believe your 20 day would be that high, but I'm just going to mark it out just to be safe. 20 bars, your 20 day would be right here. All right. And then I believe your 40 day would be near that 60. Yeah. So 60 and 40 is the same. Okay. But look what happens when we take these time-based liquidity levels is it becomes support, right? Just some things to think about. I don't know how I got into this. I honestly just started ranting. Any questions or? Yeah, but I think IPTA Data Ranger is definitely something really, really powerful. So definitely be on the lookout for that. Casper, he says that if you do use IPTA ranges for intraday trading, he suggests using the 20-day look back, and that's more like short term. Explain one more time. Yeah, I got you. So so essentially how we're doing the IPTA data ranges, look forward and look back. I'm just going to explain it in like how I was taught, and I hope this is correct. Is essentially you're looking for SMT divergence. So let's say this is a quarterly shift, right? Because it's July and this is Q3, I believe. Yes, it's Q3 of the year, July, right? So we're looking for that quarterly shift. So once we get that SMT divergence on the highs here, once we get that SMT divergence on the highs here with ES, right? So here, just mark this out for you guys. There's the SMT divergence here, okay? So once that occurs, we're now looking for the market structure shift. So where do we get that market structure shift? Is we get it right here, right? The most obvious market structure shift. And so what day did this market structure shift occur? It occurred on August 2nd, okay? So we now for the cast, sorry, let me remember correctly. Oh yeah, for the look back, we can now use the first day of the month that this market structure shift occurred. So that would be August 1st. So this August 1st would be for the look back. And so we can now 20 bars, 20 trading days. This is the 20-day low. Right? And so from here, we can do another look back 40 days or 40 trading days, remember. So that's 40 bars on your daily chart. So the 40-day low would be here. Okay. And so now we can look back 60 days or 60 trading days, which would be 60 bars. And so the 60-day low would be all the way over here. And remember, this isn't like picture perfect. It's a framework for sure. I wouldn't say like, oh, it has to go here by that time. But like generally every 90 days or 60 trading days, essentially the quarters of the year, you'll see a what ICT calls a quarterly shift, and you'll see the markets tend to shift in direction essentially. So from here, now we have the look back, right? From the first day of the month that the market structure shift was created. So that would be August 1st, and that's where we did look back from, okay? What tool counts the bars? So if you press shift and then click, then it'll bring out this tool right here, measure, right? So I just shift, click, and then I just measure the bars. If you want to get lazier with it, you can use IPTA ICT anchored IPTA data ranges by 2 degrees. I really like this one. And then it lets you anchor it. So this vertical line, wherever I click, will let me anchor it. So let's say I want to look back from this day right here. So if I look back, then I can see that, oh, I got my 20-day, my 40-day, and my 60-day down here, right? All right. So to do cast forward now is we're looking for the first sign of institutional sponsorship. And so how can we spot that first sign of institutional sponsorship? Is that SMT divergence on the highs, right? So for our look back, we're looking for when the SMT divergence occurred rather than when the market structure shift occurred, okay? So from this high right here, because this is the SMT divergence, right? On ES, this made a higher high. This here made a lower high. So we can look from this specific trading day, and we can now cast forward. So if I were to put my indicator back on, ICT anchored IPTA data ranges by 2 degrees, right? I can put it on this line now because that is the SMT divergence day, right? And so now I can look cast forward. So this is my 20-day, 40, and 60, right? Does that make sense? So within the first 20 days, I'm really looking for that IPTA 20 to be hit. Okay. And then I want to see, and then I wouldn't say instantly like it's gonna go for like the next ones. Just like once we tap a time-based liquidity, we want to pay attention to what happens next. And remember that what I said about the smart money reversals, right? The 3 qualities of a good smart money reversal. Well, what do we have here? Well, 1, this is within a higher time frame PD array, if I remember correctly. This is within a monthly fair value gap. Okay. Right? That's a monthly fair value gap right there. What are the candles doing? Candle bodies is respecting that, right? So 1, we have our higher time frame PD array. Check. Number 2, we have SMT divergence at the lows. Yes, we do. SMT divergence right here, right? And number 3, do we have a balanced price range or a market structure shift through a swing point that rebalance of previous inefficiency? Yes, we do. We have a balanced price range right here, right? So now we can look at this as the smart money reversal or true market structure shift. Okay. Right? And so from here, we can now look for buys into where? Well, I'm looking for this inefficiency right here. Because remember, if you guys watch my video on the internal to external range liquidity, right? Then you have what? Time-based liquidity as your external. You even took that low, right? External range liquidity. Then trade back into that internal range liquidity now, right? And then we can trade back into external, being that IPTA 40, right? By the 40th day, I'm expecting the look back 40 days to be hit. Does that make sense? So this gives you like a very good framework of what we're really looking for. That makes sense. So let me just do something really quickly here. Okay, never mind. I'm just gonna leave it at that for now. Sorry, I'm getting a phone call. Give me one moment. Okay, I'm back, but I do have to go now. So if you guys have any questions, I'll be back on Tuesday. And honestly, looking at Tuesday, we don't have news, right? Like, once again, we want to pay attention to our economic news calendar. So let me pull that up for you guys. I'll just show you guys my entire thought process here. That is not the right tab. Right? So we don't have news on Tuesday, Wednesday, or Friday. So I'm anticipating for, well, I need to see what happens on Monday first. But Tuesday we have no news, so I'm not really expecting the most. So I'm really looking at it a XAMD kind of week in terms of quarterly theory. So we're looking for expansion on Monday, consolidation on Tuesday, manipulation on Wednesday, distribution on Thursday, and it lines up perfectly with the economic news calendar. So that's definitely what I'd be looking for going into the week. But I'll get more in depth with it on Tuesday. If you are in my, I don't want to like advertise it too much, but if you are in my premium group, then I'll have the weekly outlook. But yeah, once again, I'll be hosting these free streams every Tuesday, and 100% it's like optional if you want to join that other subscription based. What's the best kill zone for gold? I wish I could tell you that. I really do. That's something I'm gonna have to. That's something I have to ask my mentor about, because gold isn't something I really trade. So I'll get back to you on that. Just remind me. Like, just ask the same question in the future, and then I'll answer you. I have a question. When we use weekly profile, do we use the vertical lines for true day open, or do we use the real candle? Let me think really quickly. I've honestly learned it using both. One at 1800 EST and midnight EST, right? So from my experience personally, I do think that using the midnight open to divide the days is cleaner, in my opinion. Because the true day open is at midnight EST. Yeah, I can analyze gold. I was saying earlier though, like, I don't have too much experience with gold, so I can't really like, I don't want to mislead you guys in terms of this, but if I am looking at analysis in terms of gold right now, is from my experience is that every time we take liquidity is we see like a large displacement from it, and that's just what I've been seeing. We take liquidity here, right? Even previously I wanted to I wanted to long this, but I got scared because I had no idea what gold was doing. We took this liquidity, we displaced lower, right? And then we took some more liquidity and we displaced higher, and then we didn't even hit that high, and then we came back down, took more liquidity, started displacing higher into all this liquidity, right? So it's like it was very confusing for me personally. Like I don't trade gold, I just tape read it right now, same as like your USD. And I think that's just where all traders should start, is tape reading, because if you can't anticipate what's going to happen, like number one, if you don't know what your setup looks like, how are you going to anticipate it? Number two, if you can't anticipate something, how are you going to trade it, right? So you always got to start somewhere, and that's what I did with Euro USD. Is I tape read Euro USD for like the past like half a year, and now I'm finally starting to like trade it a little bit. What are all the ICT setups you look for to take your trades personally? Oh, sorry, I forgot to analyze gold. Right now, gold, this is what I'm looking at. This balance price range. I want to see how we react to that. Possibly sell, because I see so much low resistance liquidity. Like I honestly think gold just wants to plummet. No, but it just looks like such a clear market maker sell model. I honestly thought that this over here, like in my Discord, I did have this analysis. I think I deleted the channel though, because I don't do commodities too much. But here is like, I was like, okay, like we're going in here, we have this market maker sell model, it's too perfect, we're going lower into these lows right here, right? And then we ended up just like displacing higher. I'm like, okay, no clue where we're going. So we ended up, right, inverting these gaps with this balance price range. I think this is a news event too, I'm not sure. But yeah, in terms of gold, I still think we're going lower. That's just my guess, my best guess. ICT setups, I guess I really don't know how to explain it, because what I do is I just essentially use top-down. I do top-down analysis by utilizing that time frame alignment, right? And then within that higher time frame area of interest, I will look for market maker models and then trade market maker models. And I think that's what ICT really boils down to, is power 3 and market maker models. So if you get really good at spotting one market maker models within like higher time frame PD arrays with that SMT divergence, then you're like literally set for life, in my opinion. Like that's just how I trade, right? Using market maker models. And then power 3 is understanding accumulation, manipulation, distribution of each candle, right? So I think if there's anything you guys should be practicing, is if you're a day trader, like an intraday trader, then just practice looking for buys below the midnight open and looking for sells above the midnight open, okay? And then for the week, if you're like a swing trader, then use the weekly open, right? The weekly open would be Monday at 6 p.m. EST, okay? That's the true week open. And look for buys below it, look for sells above it, depending if you're bullish or bearish. Oh yeah, Aiden, definitely do it. Actually, UTC, yeah, New York time, right? New York time is correct. But yeah, I've learned to like split up the weeks like in both ways. But I, from personal experience, I think splitting the week in using midnight is more accurate in my opinion. So definitely look at that. If you guys haven't heard of quarterly theory, I definitely suggest you guys look into that as well. It provides a very clear framework to trade around. So will I come I want to be live daily? I probably won't be live daily. um I noticed gold usually have more movement around 9:30. Yeah, I think at that, in that case, the New York AM would be uh your go-to trading session. If I were to give a time frame for any asset to trade, I would say Wednesdays from 9 to 10:30 a.m. is the best time to trade. Trust gold back. I don't know. Yeah, so I think that's all for today. Like, this was supposed to be a test stream, but ended up being 47 minutes. So I appreciate you guys coming here, and definitely a lot more people than I expected. But once again, thank you guys. Appreciate that. I'll see you guys Tuesday. If you guys do hop in, I'll be live. Either tape reading or trading or Tuesday. I highly doubt I'm gonna be trading on Tuesday, just because there's no news, right? So from 8 is always manipulating. Yeah, that's something I'm gonna have to look at for sure. Because this was NFP right here. So actually, somebody in Playbit, he caught a trade like this. Like, he called it too. Called it live for the whole Discord. He like caught this trade or something. I don't know. It was like a 10-hour trade. And then everyone took the signal. I was like, what the hell? You guys are crazy. Thank you, Sampath. I just want to give credit to my mentors as well, right? Like, a lot of things I learned is from my mentors, like ICT, MXM Trader, Jesse or Casper, SMC, and then there's also Trader Day, and then I have a private mentor as well that doesn't really have any social media. So yeah, you can find all that information in my Discord though. So once again, I actually have to go now. So once again, thanks for coming by, guys. I'll see you guys Tuesday, and yeah, we'll go from there. If you guys want, you can check out my links, all my links. If you do decide to join the premium, there's a 14-day trial that's free. So if you guys want to join that, you're free. You're welcome to. It's optional. You don't have to. Other than that, thank you for coming by, guys, and yeah, take care, everybody, and have a great Sunday. Take the day off, in my opinion. Just relax and prepare mentally for the week, right? Because we're heading into a very interesting week in terms of economic news. We can anticipate for some choppiness in the market. So, right, patience is a very key factor to the game, right? So if we're anticipating choppiness, then we don't want to take too many stabs at the market if we're going to be chopped out, you know what I mean? So just be very picky this week if you don't because I probably won't be with you guys the whole week, right? So I will still post like announcements and stuff in my Discord, but once again, no news, no trade is essentially how I usually like to view it. Maybe perhaps you could look at the 9:30 equity open as a volatility spike, right, in the market, but other than that, that's really all I'm really looking at. From 9 to 10:30 is generally like the sweet spot to trade. So yeah, once again, take care, everybody, and thank you for attending. Appreciate it.
There's no need to shout when you're this close to me. Baby, can't you see I can keep on loving you? Just let me keep on loving you. Tell me what I'm supposed to do, 'cause I'm